Hello everyone, here Chris Capri, founder of Second Skies. Today I want to talk about double dipping with the RSI, a very common formation that we see across multiple time frames, usually suggestive that some sort of fade or reversal is going to happen. Let's take a look at this and I'll show you what I'm talking about here. Okay, so here we have a case of the dollar yen where it's in a pretty serious downtrend. And now remember, the RSI is measuring the number of pips gained versus number of pips lost, or advances in pips versus decline in pips here. Now the first time RSI usually hits oversold in a downtrend is usually when a trend is at one of its strongest points, because everybody is on board to get it to that level, to push the RSI to that level, particularly on a daily chart. A lot of people often trade the fade or the reversal when the RSI first crosses back into normal territory or towards the mid-range. And I generally like to wait for some sort of divergence and double dip on the overbought or oversold levels. And so here we have a great case of that where it does double dip the second time, but there's good divergence. And when the pair recrosses back into normal territory, back towards mid-range levels, is exactly when the reversal starts for this pair. And so usually this is a sign that the market is exhausted because of the divergence in the second dip there, that it wasn't able to create a further stronger reading in the RSI. Let's take a look at another example of this here. Euro dollar most recently hit a double top at the 159 level here, but look at the divergence in the RSI. And so the first time it came through, the pair continued on quite strongly. Once it hit overbought, it went for a good 800 pips there. But as it crossed back, that was the first little drop. The second attempt though with the RSI was not as high, yet price action was, so there we have the divergence. And when it crossed back over is when the pair really started to retreat and fall off a good few hundred pips there. Let's take a look at a few more examples here. Now we have the pound US dollar in an intraday time frame. The pair bounced off this double bottom or triple bottom support here at 97.50 and went on a nice 450 pip run here. Now the first time the RSI got into the overbought level, the pair had a little bit of a sell, but not much. It had still some more upside to go. The second time it did that though, again we have divergence. And when I usually wait for my signals, I wait for the RSI to come back down the second time, in this case crossing over the overbought level here. And when that happened is when this pair fell approximately 450 pips. Very, very strong move. Taking a look at also another recent example with the dollar Swiss here. Had a bounce from 170 up to 101.70, and then a little bit of consolidation, and then another further up move to 102.45. Now look at the RSI again, showing the double dip pattern here into overbought territory. The first time it did it is when the pair still had some strong moves left in it, but the second attempt higher, the buyers came back in. They tried to reignite this uptrend, and they just weren't able to push it any further. When they got out, this is where the vacuum happens, and a good fade reversal was set up. The pair crossed back over from the overbought levels back into normal mid-range territory, and that's when this pair went on a very strong 250 pip decline in about 24 hours. So that pretty much sums it up. To briefly go over what was talked about here. Remember, RSI is measuring the advances in pips versus decline in pips, and it converts that into a line. So if you see it not gaining as high as the price action, and there's some really strong divergence, then that means that maybe the buyers or the sellers in whatever direction the trend is are having a hard time really creating stronger readings in the RSI, potentially leading to a fade out reversal after some profit taking. The double dip with divergence is what we're really looking for, and so that is what is really kind of the symbolic indication that they are looking to exit, that they are exhausted, that they don't have, not looking to put any more capital into that position. And when you have that double dip in conjunction with the support and resistance levels matching up, that usually sets up a very high probability trade opportunity to catch a nice fade or reversal in that particular pair. So for those of you that have some questions about our services, we do private education and mentoring. This is something that we specialize in. We also launched in 2008 our 2S Sniper system. This had an excellent track record. It's now in its third winning month. It just completed March. Again, another winning month, very highly profitable, great accuracy ratios. And so anybody interested in that, you're welcome to visit our website. We also offer trade signals and live market analysis on a weekly basis. And so for those of you who are looking to find out more information about that, you're welcome to visit our website, www.2ndskies.com, or email us directly, info@2ndskies.com. Good hunting, everyone.